My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to save you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. 'Tis the season to get clobbered. I'm talking about earnings season, and this time it already feels like it's going to be a rough one because the market seems to be nauseated by the companies that have already reported, with the sole exception of tech, which is once again getting a pass. We could have more days like today where the Dow lost 174 points, S&P tumbled 0.62%, NASDAQ shed 0.63%. It was much uglier at one point during the day. What makes me so sure that earnings season could actually be so difficult? I think it's because we're rooting for lower inflation and less wage growth. But so far, we just aren't getting that scenario. Oh, yeah, we had a 1-2 punch today of a hotter-than-expected consumer price index, coupled with a government bond auction of 30-year treasuries that fell flat, causing the bond market to get crushed while the yields soared. What the heck is the government even doing offering a 30-year treasury right now? They do nothing! It's the Birkenstock of bonds. To reference an IPO that smelled like dirty feet, pricing $46 just before falling to $37 and change after the first 2 days of trading. Another day like today, and it will be buy one, get one, BOGO. So much for Barbie shoes. The unforgiving backdrop means the market will come up with a negative interpretation for whatever comes our way. And the pain,
the house of pain,
tends to last for more than one session. Now, I don't believe in trying to game earnings because it's just too hard. But post-earnings, I am flabbergasted at how tough this market's become. We do have a sneak peek of how it reacts to earnings, though. PepsiCo, the true starting gun of earnings season, and it reported an excellent set of numbers 2 days ago. Not only did PEP crush the estimates, they gave you a glorious forecast, and then uncharacteristically, they also gave you a forecast for next year. What a confidence booster!
That was easy.
Except today, the stock's down hideously. Not just because no one believes PepsiCo will be immune to the new weight loss drugs, but because it's now seen as too expensive. You aren't going to get a win in a stock that sells for over 20 times earnings, especially when the underlying company makes fattening foods, even if they promise to change their stripes or say make smaller packages. These new weight loss drugs are still roiling everything in the food and beverage space. Now, there's a lot of denial, and of course, it's a difficult conundrum for food companies that really haven't seen any decline in their businesses, like Pepsi. Pepsi actually saw an acceleration in sales. I thought the quarter was terrific. If they begin to say they adjust to these drugs, I mean, maybe, I don't know, maybe smaller packages, they don't seem to know it's not the size of the package. It's the fact that these new weight loss drugs make snack food seem repulsive. They take away your cravings, and without the craving, a greased-up potato chip is no longer appealing. Even if you still like them, you'll eat 3, and then you'll be full. Given that possibility, shouldn't PepsiCo's stock trade at a much lower price to earnings multiple? It's a subjective business. Hey, should PepsiCo trade as low as the stock of Conagra at 10 times earnings? Or maybe Kellanova at 13 times earnings? How about General Mills at 14 times earnings? Good company. But these food stocks were all way too expensive going into earnings season, and now we're finding out how people really feel about their suddenly not-so-safe business models with 3 and change dividend yields versus the 20-year Treasury safety blanket at just over 5%. And that's really the reason why the stock of PepsiCo can't catch a break. Hey, speaking of stocks that are too richly valued, Hormel, a stock we've liked very much over time, dividend aristocrat, it ran into a buzzsaw today at its analyst meeting. It was a pincer move, higher costs and hidden worries about the GLP-1 drugs, because they have plenty of stuff in their product line that could make you obese, if you really went to town, that is, unless you were taking Wegovy or Mounjaro. We're now in a moment where people don't know anything about these drugs other than the fact that they're vultures pecking the liver out of the Promethean packaged goods companies. I always wanted to use Prometheus in the show, and I just managed to work them in. Now, you shouldn't fear everything. You can always come into earnings season de-risked and ready for upgrades. This morning, Walgreens, you've been there, I've been there, reported a suboptimal set of numbers. Carl continued to ask me about it. I told him it was time to. You see, there's a new person running Walgreens, a knowledgeable healthcare industry veteran. Exactly what is needed at this company, and he will reinvent it. Soon, I'm betting it will no longer be what I call a theft machine. When I was in San Francisco a couple of years ago, I saw the person in front of me at a now-closed Walgreens rob the register using a knife. No one seemed to think anything of it. It was just another day at work. And then I was in Delray. I saw a thin man stuff his sweater to the point where it looked like he needed Wegovy. I was appalled, so I mentioned it to the woman at the register. She said, oh, that's okay. He's in here all the time. Never thought of that. Now, I don't think that the new CEO, Tim Wentworth, will zone out like that. I don't think he's going to tolerate having his stores get robbed so easily. More important, he'll be the person who steers Walgreens toward being not just a drugstore, but your healthcare company. It is hard. I've been thinking about this, and I'm going to come up with something. It's a brainstorm. Stay tuned. Focus. It's hard to shoplift healthcare. I hated that a nearby Walgreens pharmacy where I literally spent thousands of dollars sent me some stupid form letter that's closing this week, like it's some sort of dollar store. I mean, it's bad enough that I can't get anyone to help me open a lock to buy some Gillette razor blades, which, of course, I now have on an Amazon subscription. Of course, I don't know if Wentworth can truly change the stores. Maybe the whole place should just be one endless line of vending machines. Either way, the healthcare business is a good one when it's not an afterthought. That's why I think Walgreens is a good buy here, even as I can only wonder how devoid of computing power and digitization the store might be. Hey, do not forget, Walgreens wholeheartedly embraced Theranos before it was revealed as a total fraud. Now, we're on the eve of the banks reporting, and I think these companies are already defrocked, de-risked, whatever you want to say. Can Bank of America, which sells at 8 times earnings, slink down to 7? I'm not sure, but I know it has more room to run if the reports say anything good. We're partial to Wells Fargo for the Charitable Trust, which is coming in a blistering 8 times earnings with a 3.5% yield. Okay, not enough to be a trampoline. But if CEO Charlie Scharf could say anything positive at all, I think the stock can jump. The problem is that pesky yield curve. We know the bond market wrecks the banks at every turn, clubbing them like, oh, well, you know what I say. That said, we have to be wary of being too negative. If the bond market behaves like it had the last couple of days, if there's no new issuance of long-term paper by the Treasury, they know nothing. If we get some less hot economic numbers, then we will stabilize. But right now, the combination of higher rates and these drugs that impact diabetes, obesity, renal failure, heavy drinking, and strokes, and even high blood pressure, not to mention sleep apnea, have been an anathema to the stock market, especially the overvalued packaged food plays. Bottom line, when the price-to-earnings multiples are too high and the yields are too low, you better deliver a perfect quarter, or else your stock's going to get pancaked. Problem is, PepsiCo did report a perfect quarter, and Hormel had a pretty darn good analyst meeting. But when we were finished, you were digging into a can of Spam with some Doritos. And I think a market fueled by Wegovy and Mounjaro is not ready for that particular combination. Hence why I'm worried about earnings season, and I'm saying it could be a pretty rough one if the backdrop makes things more difficult, unless a stock has already been hammered into oblivion. Randy in California. Randy.
Hi, Jim. How are you today?
Randy, I am in good shape. How about you?
I'm great.
Great.
Hey, I'm trying to diversify for my grandchildren, and I want a stock that I can sit on for 10 or 15 years.
Sounds
and
good.
I'm looking at Caterpillar for 2 reasons. The past decade, it's doubled its stock price, and we got all the infrastructure money that's going to be trickling down to the states. So your opinion
Randy,
on Caterpillar?
you got what I call horse sense. I think that Jim Umpleby is an amazing CEO. He's turned Caterpillar around. The company actually, I'm not kidding, they're about trying to make money. I mean, I know that sounds like a shocker, but believe me, the old Caterpillar, Now, here's the thing. The infrastructure money's coming. The dividend's going to go up. There'll be a buyback. I think you should buy it right here. My Charitable Trust owns it, and we're really proud of it, and we're going to buy more if it comes in. How about we go to Tyler in California? Tyler!
Hey, Big Booyah from California. How you doing, Jim?
I am doing well, getting over my quadruple hernia like it was yesterday.
Nice. Hey, I wanted to ask you about Instacart. What do you think?
Instacart, they also call that thing, what is it, like Crybaby or something, Maple Tree? Here's what I think about Instacart. They know nothing! Sell, sell, sell.
The House of Pain.
They know nothing! Going back on that one because I like it. Did I miss? Oh. How about this one? And finally, I'm throwing this one in because I like the bowl.
Uh-oh.
Oh, my. And I did a 140 with a bad elbow. Brian in Pennsylvania. Brian!
Hi, Jim. Thanks for taking my call.
No problem.
I just want to mention that even though I'm a Mets fan, I am rooting for the Phillies in the current series.
Yes! Yes, and it's tonight. And I tell you, Bryce Harper stared down that shortstop. I mean, what the heck? Making fun of a HOF, not in my watch. What's going on?
Yeah, well, Jim, my question is, over the summer I bought some shares in T-Mobile, and they recently announced the intention to pay a dividend, but they haven't declared the X date or the official amount per share yet. I want to know what your feeling is on that, and do you think I should buy more?
All right, let me tell you something. This thing is run by a guy by the name of Mike Sievert. And he is about as good as it gets, and they've done a fabulous job. It's the only one of the 3 telcos that I am recommending, and I think you can buy more T-Mobile. My hat is off to them. They're just phenomenal. Okay, right now, the combination of higher rates and high multiples is setting us up for a little more dangerous earnings season than I'm ready for. Hey, look, it never pays to be too negative, but it's becoming clear that the bar has been set a little high for a lot of companies. On Mad Money tonight, I know the street shows its love for the job report, but I've set my sights on something new. The stealth contender in the data realm that you need to know about. I'm sharing why I think the CPI may soon see its star rise as the age of inflation anxiety continues to unfold. It is not like the age of Aquarius. Remember that play? I don't have any. Then yesterday, we hosted our monthly meeting for CNBC Investing Club subscribers, and we couldn't get to all of your amazing questions. So we decided to keep the momentum going with another round tonight. You don't want to miss it. And Delta Airlines, symbol DAL, released third-quarter earnings this morning, and despite a surge in profit, the stock fell in response. Now, we got to figure out what the heck happened. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.